Hello and welcome to the latest trades and tutorials video. This is Jeff Bish, president of MarketGauge.com, and in this video I am going to take a look at what I'm going to call the last sector really standing, the one that if this sector breaks down, it's an indication that the beginning, what could be the beginning of the sell-off we're seeing in IWM and Qs, IWMs, and S&Ps could really accelerate to the downside. So before I get to that, first, let me make sure that if you're just finding this on YouTube, that you like the video and subscribe to the channel, and also know that we have more videos like this at marketgauge.com/tutorials, and we put out even more content on Twitter at two handles, one at MarketGauge, the other at Market Minute. And finally, if you're not already watching this in HD, change the settings in the lower right hand corner. I think you'll like it much better. Okay, so normally when we look at the Modern Family, and if you don't know what the Modern Family is, then you absolutely need to get to Mish's upcoming live presentation. I'll put a link to that in the text of this post. If you know the Modern Family, then you know IWM is usually the index over here in the upper right, and it has broken down ahead of the market. That's a sign of or a warning sign that the general market is really being threatened. But there are some groups that have held up, and the SPYs have started to break down. Qs have even started to break down. But despite that, the strongest group over the last 6 months or so, semiconductors, is really sitting at a pivotal level. Now, the blue line that you see here is a 50-day moving average. And if you take a look at the retail sector, it's broken down well below its 50. 200 is this green line, well below. Downtrend is intact. If you look at IBB, downtrend is intact. All right. If you look at IYT has been going sideways, but it has held its 50-day moving average. But IYT is not going to lead the market. So focus on SMH. If SMH breaks down below the 67 level, then the market is really, at that point, even the strongest are rolling over. And the other sector to keep an eye on are the financials. So the KRE here, not surprising that it sold off with the Fed news that it's not going to raise rates, even though it was expected to get that news. But the key to the KRE here is to box in this range, see if it holds the 50, and see if it recovers and moves back to the upside. So in order for this market to head higher, we need the KRE to turn around, hold its 50, and move higher. And we need the SMH to not break down under 67. So if those two continue to break down, that's really what you need to focus on to be more concerned about the market. Now, what do you do about it? Well, there's an interesting setup here on the VIX. So let's take a look at the VIX ETF, and I'll just point out an interesting pattern. I'm going to pull this over here so that you can see. I'm going to put the IWM, well, you know what, I'll put the Qs up top and the SPYs down here. We've already seen the IWM has gotten smashed. And the interesting pattern here is that look at the relative performance where you've got for today, we broke down below the prior day's low, but VIX did not take out the prior day's high. All right, S&Ps have taken out that October low, but VIX has not taken out that October high there. And the same could be said for right here, right? So the sell-off in the SPYs has led to kind of a recovery in the VIX, but that sets up really nicely. If the VIX breaks out over this high, it should get going and should not come back down under its 50-day moving average. So oftentimes markets will just completely let loose from what looks like an oversold area. We're going into the elections. It seems like the time between now and the election should be supportive of at least elevating the VIX, so that even if it doesn't break out, you should be on the right side of this trade, and you've got a great inflection point over these highs right here. So summarize that. If markets continue to sell off, selling the market down here might be tough. Buying the VIX through this level might be a better way to play the market on the downside. And if you'd like to learn more tactics in terms of how to anticipate which way the different industry groups are going to go so that you can get even more precise in timing your way in and out of these major moves that are inevitably going to happen after the election going into the end of the year, make sure you check out Mish's live presentation that's happening this Thursday. Again, I'll put a link to it in the text. Check it out. It's free. I'm sure you'll like it. Hope we'll see you there. Hope that helps, and I'll see you in the next video.